Well, welcome everyone to our Donor Advised Fund webinar, What Parish Stewardship and Episcopal Development Leaders Need to Know. It's wonderful for you to join us tonight on November the 15th, 2016. I'm very happy that we are able to be joined by two wonderful professionals at the Presbyterian Foundation, and we're going to hear more about them in just a moment. For all of you who are joining us tonight on this webinar, or those who are listening to it as a recording, the Episcopal Church Foundation has made the decision to move forward and be very progressive in the area of donor solutions. And in doing so, we have partnered with the Presbyterian Foundation, which is, just like the Episcopal Church Foundation, the national foundation for the entire Presbyterian Church, as ECF is the foundation for the entire Episcopal Church. We have been able to join with them in creating a donor-advised fund. The Presbyterian Foundation has been doing donor-advised funds for over 20 years. And we are very grateful that they were willing to partner with us and work with us on a one-on-one basis on creating all of the wonderful aspects of the Donor Advised Fund that you will be hearing about shortly. But just as a brief introduction before I introduce the Episcopal Church Foundation to those of you who may not know it, I'd like to introduce the gentleman seen before you. On the left, we have Greg Roussos, who's the Executive Vice President and Chief Operating Officer of the Presbyterian Foundation, as well as Joe Tackett, who is the Planning and Development Officer for the Presbyterian Foundation. Joe Tackett is going to be the primary leader of our workshop tonight as our Donor Advised Fund expert. But before we get into that, I know I have a hand raised. So William, if you could please type in if you're having a problem, and I will respond to you in just a moment. But just to do a very brief introduction, the Episcopal Church Foundation, for those of you who do not know us, we are an independent and lay-led organization. We focus on empowering leaders, both lay and clergy, throughout the Episcopal Church. And we do that in two primary ways. First being our leadership resources, as which many of you may be familiar with through our various webinars that take place, our Vital Practices website, which contains all of the different leadership resources, including our recorded webinars that are available to anyone at any time, day or night, as well as a variety of publications, including our very popular Vestry Resource Guide. In addition to that, we also have a number of financial resource programs where we are able to support Episcopal leaders throughout the church in a variety of ways of raising and managing financial resources, including a capital campaign program where we are able to work with parishes on a sliding fee scale when that particular program is needed, as well as the other areas of planned giving, where we are the main resource for planned giving for the entire Episcopal Church, as well as a wonderful resource to parishes, dioceses, and other organizations in the management of endowments. And I would be more than happy to work and speak to anyone regarding any of these topics. But I'd also like to just take a moment, even though I don't have a screen for the Presbyterian Foundation, and just allow Greg Roussos to say a few words about the Presbyterian Foundation.
Thank you, Jim, and good evening, everyone. First, let me just say it's a privilege and honor to be able to serve the Episcopal Church Foundation with its Donor Advised Fund. As Jim mentioned, we've been offering donor advised funds for over 20 years. And because of our partnership, we are making available all the resources we have for our donor advised fund to the Episcopal Church Foundation, And so anything we can do to help Jim and the Episcopal Church Foundation, we want to do that. We really value this relationship. The Presbyterian Foundation, as Jim mentioned, is the national foundation for the Presbyterian Church USA. It has been in existence since 1799, over 215 years. We have over, I think, 10,000 different types of accounts that we manage and over $1.7 billion in assets that we manage and service. So we have been around for a long time, and again, we really value the opportunity to serve the Episcopal Church Foundation. It's great to do this, and it's amazing when Jim and I talk, how many similarities there are between the Episcopal Church Foundation and the Presbyterian Foundation. So Jim, thank you for allowing us to participate with this tonight.
Well, the Presbyterian Foundation has been a fantastic partner, and it's been wonderful to work with an organization which shares our same mission of empowering both lay and clergy leaders throughout our respective churches. So it's a wonderful ecumenical partnership, and just given your experience, a wonderful opportunity. Because even if people do not choose to work with the Episcopal Church Foundation or the Presbyterian Foundation on a donor-advised fund, they still can benefit from all of the knowledge that we'll be bringing you in this brief webinar this evening. Just one quick note, I know William Shaughnessy has raised his hand, and if you have an issue or a problem, William, please do type that into chat, and we will try and help you out as best we can. I'll be doing the technical side and also jumping in every now and again to supplement the presentation which Joe will be doing. But what I'd like to do now is to turn the floor over to Joe Tackett, who is our Donor Advised Fund expert working with us here at the Episcopal Church Foundation. So without further ado, Joe, please take it away.
Thank you, Jim. I want to second what Greg said. It's an absolute honor to be here on your behalf and to work with the Episcopal Church Foundation. Just really excited about this opportunity and really the relationship that we've been building over the last little bit. As you mentioned, I'm a Planning and Development Officer. My main role here with the Foundation is working with individuals across really the vast array of services that we offer, one of which is certainly Donor Advised Fund. So with that said, I think we should probably go ahead and jump into the presentation itself and discuss different aspects of Donor Advised Funds and also some aspects that are specific to the Episcopal Church Foundation's Donor Advised Fund. So this first slide here, really what we're talking about is what is a donor advised fund, and that's really regulated by the Internal Revenue Code, and they provide us with this lovely definition. Again, a fund or account owned and controlled by a sponsoring organization, which is separately identified by reference to contributions of the donors, where the donor or person appointed by the designated by the donor has reasonably or expects to have advisory privileges over the distribution of investment of assets. All of those must be met. And if you're like most people, after you finish reading that definition, you're not exactly sure what in the world you just read, what we're actually creating. So what I've done is gone to something that we can really understand. The Donor Advised Fund, often called a DAF, it's going to be a philanthropic vehicle that's established at a public charity. It allows a donor to establish their own individual fund and make charitable contributions on their own behalf to that fund. They're going to receive an immediate tax benefit when they do that for that contribution. However, they can then turn around and recommend grants out to other qualified charities. So an excellent way to think of that, I prefer, is a charitable checking account. Some have referred to it as a charitable savings account. The reason I maybe choose charitable checking account is because we like to see the money actually go out to organizations that stand to benefit from contributions. Savings we tend to think of, well, as something that we don't want to touch. But with donor advised funds, we really do want to use that money, but also give it the opportunity to grow over time. Now, on this slide, what is a donor advised fund? Here, what we're really looking at is the flow of assets and then the flow of money and different benefits. So you'll see you have an individual on the left-hand side. What that person's going to do is they're going to contribute something to their DAF, something of value. It can be cash and securities. Those are the two most common. But it might be some form of property. It could be real estate. It could be a rental property. It could be a piece of art, perhaps. Again, lots of different options within that. But the most common are cash and securities, specifically appreciated securities. Now, as you'll see, the green flows into, that's going to be something of value flowing into the DAF from the donor, but it's going to flow out to eligible 501c charities. It will not flow back into the donor as far as an actual cash distribution. It will not flow over to individuals as a private grant to an individual. Again, money is going in and then it's going out to public charities. You'll see what does return to the donor is that income tax deduction that I mentioned. That occurs during the year in which the initial contribution to the DAF is made. Now, again, all of the flows out, the grants out, do not have to happen at that same time. But again, you're going to have that income tax deduction in the year in which that's made. So, I mentioned DAFs are sponsored by public charities, but we have a sort of a range of people that offer them. National charities, these are going to be very large organizations, some of the largest charitable organizations in the U.S. and actually in the world at the moment. Those are people like Fidelity, the U.S. Charitable Gift Trust, very large organizations that really have grown very large over the past several decades when I think Fidelity was one of the real leaders in that area. You have community foundations which have been around for a very long time and some of the original leaders in donor-advised funds. Here you might have a specific regional focus. I've used one from my home state of Kentucky, the Bluegrass Community Foundation. Covers the whole central region of a state. Or the California community, they're one county, but when you include LA, quite a few people served. And then finally, some single-issue charities. Here, the ones that support a specific faith, a cause, an institution. These certainly include the ones that I've mentioned, but obviously they include the Presbyterian Foundation and the Episcopal Church Foundation. And even though they do certainly support a specific faith, if you're like the Presbyterian Foundation and the Episcopal, you can also support other charities through that. There are a handful that might only allow you to support their specific charity, but that is not the case with the DAFs that we're talking about tonight. So some of the things that you can expect when you're opening a DAF. Now these will apply to both the ones that we are offering and the Episcopal Church is offering, but it's really a general discussion. You're going to have different initial minimum requirements to open that donor-advised fund. Again, the lowest that I have found is $1,000, and that is really the extreme low end. Typical is in the middle range, $2,500 to maybe $5,000. And then you have a handful that are at this bottom category, $25,000, $250,000, even $10 million. Those extremely high numbers, they tend to come in really as a barrier to types of investments. If a person were to open it up, an account at that level, it simply opened more investment options and investment styles to them that weren't available at the lower levels. So, Jim, I believe you wanted to talk about some of the pieces that are really special about the ECF DAF.
Well, just briefly, thank you, Joe, is to mention that we've worked very hard to make our Episcopal Church Foundation Donor Advised Fund as accessible as possible so that practically anyone who is inspired or has a need to create a donor advised fund can create one with us and use it for their purposes. I had a funny conversation with someone recently who said, well, gosh, can a non-Episcopalian make a donor advised fund at ECF? And I said, of course you can. Anyone can make them. The limitation, which we'll reiterate a little bit later, is just that the majority of your grants, which you'll be making over time, must go to Episcopal entities like churches, dioceses, or other entities. But just to reiterate how accessible our donor advised fund is, you can create one with a minimum donation of $2,500 or more. So this is a great opportunity for a wide variety of donors to have access to all of the benefits of a donor advised fund at this much lower threshold level. In addition, using our online system or our paper-based system, whichever you choose, you can also make as many grants as you wish, for as little as $100 or more in each grant. I'll be mentioning more about some of these other aspects, such as the online portal access and making grants to other entities next. But Joe, why don't you continue on with explaining a little bit more about how the donor advised funds work after the gift is made?
Yes, absolutely, Jim. So the first step, obviously, is we're going to complete the application and fund that account. Whether we fund it with cash or an appreciated securities, most often the charity's policy is to immediately sell that appreciated security, so that we're really looking at cash. Now, it is then the choice of the donor to invest that amount. Different charities and different donor advised funds really offer different choices for your investments. On the left-hand side of the screen, what we see is donor advised funds that really don't offer a lot of choice. They simply say it will be invested according to however we invested. You may have an idea of how they're investing it. You may not. It may be very much behind a curtain. But again, little to no choice on the far end. Now, as you move across the spectrum from the left to the right, you're starting to get more options about for the donor and their control over the type of investments in the donor advised fund. You have certainly investment options in pools, different models that you choose. Perhaps maybe I want conservative, maybe I want to be aggressive. And then the charity itself has different models that are already built that fit that model. Some people like even more options. Again, we have individual mutual funds. Some donor advised funds even offer managed portfolios or alternative investment hedge funds. Again, typically at very much higher minimums for being able to use those investments. But what we have, both the foundation and the Presbyterian Foundation and the Episcopal Church Foundation, is a mixture. We really wanted to provide people with several options. So you have both the middle option there, where it's going to be, you can choose a different model if you like, and that's really all you want to go as far in. You don't want to dive too deep. But then you also have the investment options of choosing specific mutual funds from a pretty good array of various mutual funds that cover the gamut from low-cost index funds to active funds to socially responsible funds. Really a wide range of options there available to people. Again, more of what to expect. So now we've gone through the first step of creating the DAF, second, choosing our investments. Now the third step is the grant making. And here, generally speaking, DAFs are going to be made making grants to charitable organizations that are tax exempt. Most often these are going to be a public charity. Some donor advised funds allow grants to operating private foundations, but again, those in many regards are going to be similar to a public charity. Again, these are the charities that are actually doing the work of the charity, accomplishing their mission, not simply granting out money to other individuals or organizations to do that for them. When a donor submits that grant, it is a recommendation, and this is important. The sponsoring organization has the ability and the right to affirm or deny that grant. Now, the vast majority certainly go through. Most people don't do something that would be odd. You might have to work on the wording. There are some other limitations, but the sponsoring organization will work with you on that if there are some issues that maybe pop up. They are submitted in written form or online submission for ease. A couple different options there. And Jim, I think you wanted to talk a little bit more about specifics to ECF.
And just to reiterate what Joe is saying, and just to ask if anyone does have questions, please do type in your questions into chat. We have built in extra time to this webinar to answer questions. Many times people do not want to ask too many questions, but please do take the opportunity to ask questions about a donor-advised fund. The way these work, I mean, it's quite simple that you make a gift now, get the full benefit of the full tax deduction when you make the gift. The gift then is invested through a donor-advised fund and has the opportunity to grow over many years, or you can start making grants immediately. And in working with the great folks at the Presbyterian Foundation, we have been able, with our own ECF staff, to make all of the existing investment options available to you, so you can actually pick your own variety of different funds, whether they be socially screened funds, index funds, or directly managed funds. In addition, we even have, as Joe mentioned, funds which we can have preset for you based upon what your granting desires are over time. Some people may want to make grants right away of large amounts. Others may want to make small grants at the beginning and then allow their gift that has been placed into a DAF to grow over time so that in the future they can make even more impactful gifts. To this end, all of these options, all of them, are available through the ECF DAF as well. Your only limitation, as I began to mention before, is that the majority of the total of your grants over a 5-year period need to go to Episcopal entities, to churches, to various Episcopal dioceses, schools, camp and conference centers, or any other Episcopal organization. The rest of your granting can go to any qualified charity. So this gives a tremendous amount of flexibility to your granting ability. What also helps you in your ability to make these grants is you can make them for as little as $100 for each grant. You can do it literally 24 hours a day, 7 days a week, and you can do that on our online portal. We can also, if you prefer not to use an online portal, we can work with you on a paper-based system. It will be slower, obviously, but one of the great advantages of working with the Presbyterian Foundation is we were able to create our own online access branded as the Episcopal Church. And this is just a quick screenshot of what it might look like for you. So I want to turn the floor back over to Joe to continue talking about some of the constraints that do need to be kept in mind. And these go for every type of DAF, not just those at ECF. Go ahead, Joe.
So real quickly, though, Jim, I noticed Valerie's question, and it may be a good time to address, oh, no, it was, Valerie had typed, and now it looks like a question from Tom.
Okay. Go right ahead.
And he asked, we actually spoke about this earlier today, so I think I'll let you answer the question, but the question was on the 51% of grants. Is that a 51% of the number of grants or 51% of the dollars given?
51% of the total dollars given.
Excellent. And then we did have a follow-up question from Valerie. Do grants need to be made every year? And that is, the answer is technically no, you do not need to make a grant every year from an individual account.
If I can break in there, Joe, just to reiterate, this is one of the real advantages to a donor-advised fund. And many times people think, as you said, Joe, donor-advised funds can act just like a family foundation, but without all of the paperwork. They also do not have that requirement to give out that 5% every year. In fact, most donor-advised funds give out much more on average than 5% a year. I think the average amount, you can correct me, Joe, is somewhere between 15 to 18% or more goes out of donor-advised funds on an annual basis. However, it is up to the donor to determine. The donor has the power to consider when they want to make those grants. So if they wish to wait and allow their gift to grow tax-free, since it has already been a completed gift, your gift account could grow a great amount so that in several years, when you choose to start making your gift, you can actually have an even greater impact. In addition, one other thing, and I know, Joe, you'll be talking about this in a moment, many people who are in their highest earning years, nearing retirement, may be very attracted to a donor-advised fund. I know this is something I've been speaking about with Episcopal Relief and Development and the National Association of Episcopal Schools, that there are many institutions where people are nearing, well, where individuals may be working for those institutions, building up higher salaries late in their career, and what they wish to do is actually be able to get the maximum tax deduction by giving to their donor-advised funds while they're making their maximum salary, and then several years later, after they have retired, they can continue to be generous, but they continue to be generous through giving grants through their donor-advised fund.
Jim, I may have lost audio
right ahead,
from you. I don't know if
Joe, you're on mute.
Oh,
you're good. You're good. Go ahead.
Oh, okay, I did. You cut off mid-sentence. I don't know where we were at, but I believe you were saying we were just discussing the higher earning years and people using that at that point as a way to really stockpile a charitable contribution and use it for their get the largest and most efficient use of their tax deduction when they're at that highest marginal tax rate, but then still having plenty. It's no different than perhaps think of it as an IRA. You're really saving money to use later when there's a lower income flow, and it could be retirement. It could just simply be a few years later, but really great tool to use the money now and the tax deduction now, put it aside for charity now, but then use it at a later time. Absolutely. So some of the constraints and limitations, again, at the sort of a top level, the sponsoring organization, so the charity that is operating the donor-advised fund, they must be able to retain the right to control the donated property. And this is where we have a little bit of confusion because people, and rightly believe, this is my donor-advised fund. I have control over it. It's my account. Well, that is true in a sense, but again, it's as an advisory role. After the gift is made to the sponsoring organization, it technically does become the property of that sponsoring organization. Now, that will include the right to sell it, invest the proceeds. We've already mentioned approve or deny grants, or override grant timing. Now, many of these you simply do not see happen that often. But again, just keep in mind that the charity does have the right to do those. No distributions to private, non-operating foundations. We mentioned that earlier. Really, the vast majority of your grants are going to public charities or operating foundations. Again, these are the charities that are doing the actual charitable work, achieving their mission out in the field. Again, no distributions to individuals. That would be considered perhaps a private foundation type style grant. But again, DAFs cannot make distributions to individuals.
If I may jump in there, Valerie had an excellent question, and I just wanted to clarify it. So it depends where you wish your donor-advised fund to go on your death. It can simply continue on, where you may appoint a subsequent advisor who will continue to advise on the distribution of grants from a donor-advised fund that you would have created. You could appoint your child to continue, and they would simply continue to give grants from that donor advised fund. You also have the choice of choosing for the balance of the fund to go to any number of different organizations. And that is an option for you to choose. It doesn't automatically go to the Episcopal Church Foundation unrestricted. It would go to the different entities that you would have specified. In addition, you can also create an endowment so that you could specify that at your death, the remainder balance, if any, of your donor advised fund, as long as it complies with some threshold amounts, it could be continued on as a permanent endowment to benefit Episcopal entities like your parish, like Episcopal Relief and Development, the National Cathedral, the list goes on and on. So it is all up to the donor. And as I'll invite people later, please contact us at ECF. We'd be happy to discuss all of the many, many options that can be set up to satisfy your philanthropic desires. Go ahead, Joe.
Yeah, so we can move on to the next slide.
Please.
And this is an important donor advised fund restriction that I think definitely applies to many churches. They cannot be used to fulfill personal pledges or a financial obligation of the donor. Many churches, I'm assuming the Episcopal Church as well, these have been a hallmark of the giving, is the pledge card that's filled out. Again, if it's an existing pledge card that's already been filled out, donor advised funds cannot be used to fulfill that pledge. Now, this link that you'll see is actually from the IRS. It goes to a letter that was written in. And what we had is a donor that had created a donor advised fund. He wrote to the IRS with this issue. He said, I have created two pledges. One is essentially a single-time pledge where that could be paid in one payment. Another is a pledge where I have agreed to installments over a period of time, both to charities. And the IRS wrote a response to him. And really what I want to highlight here is from the second page of that letter. And it's this first paragraph. And there, what they're saying is that when that person created when they actually filled out the pledge card, that created an obligation of the donor. Now, as many of us know, most charities are not going to pursue a person if they filled out a donor advice or a pledge card for $20 and that was never received. However, simply because they don't pursue that doesn't mean that a legal obligation was created. Now, the legal obligation, whether it rises to that's going to change from state to state based on their state's law. But nevertheless, most states do have that where it creates a legal obligation. So if a donor advised fund was used to relieve that person of that obligation, paying that would be an impermissible benefit. So again, I just want to highlight this because I know it is a very common practice among churches. There are ways that charities are looking to work with this. In addition to the normal language that you see on pledge cards, some have added a line where it basically says, I intend to give a certain amount from my donor advised fund. Again, trying to use the language of intention to avoid creating a legal obligation. So you have some issues that you can work around, but I do want people to be aware of this because, again, it is an important issue, and in fact, on many of the grants that go out, that will be part of the grant language itself before the grant is made. You will see a notice or warning that this cannot be used to fulfill a personal pledge or create a personal benefit unique to the donor. So now we've moved from restrictions. Let's move into some of the advantages of donor advised funds. As Jim mentioned, it can be established quickly with a simple application. Now, Jim, if I remember correctly, you are using a paper application, correct?
That's correct. That is
now, where can the people receive that application? Is it your website or is it your office?
We have all of our documentation for the Donor Advised Fund on our website, and all the participants of this webinar tonight and those who will visit our Vital Practices website will have access to download that application.
Excellent. Excellent. So another benefit is they involve lower setup and ongoing administrative costs than private foundations. Again, very similar functions in that both are often set up to benefit other charities, but again, far lower the setup costs. In fact, the Episcopal Church Foundation, I don't believe there's any true setup costs, simply the minimum to open the account. I think I recently read this week where a professional athlete in Texas, they actually closed down their family foundation and switched it over to a donor-advised fund after they wound that up to lower their cost and just simply make it a lot easier to do what they set out to do, which was help other charities. There are no separate tax filings for the donor complete, as there would be with a foundation, among many other requirements that a family foundation or a private foundation would have. They do offer the ability to diversify a concentrated asset. So with that, think it can be a single stop. You have a single position that is greatly appreciated over time. This gives you the opportunity to donate that at full fair market value and then spread that out without having to worry about the capital gain that would be incurred. Now, you might have a different type of concentrated asset. Think perhaps property or a business. Again, that's a concentrated asset. You're really in one thing. And this offers you the opportunity to diversify from that one asset into other forms. They offer, we mentioned this earlier, and we've touched on it a few times, they're going to offer the donor the ability to temporally separate the tax deduction from the gifts and the grants. Again, I mentioned the tax deduction, that initially comes in the year in which the gift is made into the donor-advised fund. The gifts and grants, you can start making gifts or grants immediately, but
Joe,
again, you don't have
sound.
to.
Are you still hearing us?
At all. Looks like we have a question, Jim, that popped up.
Joe, we lost your sound.
Yes. As far as multiple individuals make contributions to one DAF, again, individuals can make the contribution. They're going to be recognized for their own tax deduction. So it will go to the deduction will be given to the person that makes the contribution. However, again, the advisor, whoever the advisor may be for the donor advised fund, they're going to be having the ability to make the various grants. So simply giving money into a DAF doesn't give that person the right to control how it is ultimately used. That will be determined by the actual the setup of the donor advised fund itself.
It can be done.
Mm-hmm. Yes, it absolutely can. Advisors, Jim, would you like to talk about how many advisors the Episcopal Church Foundation will allow?
Absolutely. And can you hear me okay, Joe? We had a slight audio glitch there before.
Yes, for the most part, we've had 2 instances where audio cut out for maybe 20 seconds, but for the most part, everything's been good.
Okay, so just to clarify, you can have up to 2 advisors on an existing donor-advised fund. Many people may choose to only have 1, but you can have up to 2. As I mentioned before, after someone passes away, you can also, that donor can also appoint a successor advisor who would continue to make grants on that donor-advised fund. But if people make a contribution to someone else's donor-advised fund, which is actually quite rare, I think you'd agree, Joe, that it's still up to the advisor on that particular fund to make the advising.
Mm-hmm. I would say that it is fairly rare. I've had it in one instance. It was an interesting instance where a gentleman set up a donor-advised fund as a vehicle to receive contributions in lieu of flowers and other contributions at a funeral. Mm-hmm. So that was one case where people actually made several contributions. Other people that were not necessarily advisors or anything like that, just simply knew the family and then they were able to use that to support other charities. So that is the only instance that I personally know where that happened.
That's a fantastic idea, Joe, too. I hadn't even thought about that. There was also
I had not thought of it either. He called in. It was, and I thought, wow, that's actually a pretty good idea. It's time sensitive. Have to get that done fairly quick. So, or at least get them the setup quick so that they can let people know about it during the time surrounding the death. But I thought it was a great idea.
And also, if someone just has their own donor-advised fund, such as one set up through ECF, you would have already appointed a successor advisor or the Episcopal entities that would receive the balance, or that it would end up in an endowment account. So then asking for additional donations to be made to an existing individual's donor-advised fund upon their death is actually a wonderful idea. That is really top-notch. There's another question about an annual cap on contributions. Now, Joe, I imagine you'll say something very tax professionally on this, that, I mean, it will, of course, depend on the individual's particular tax situation, but I don't believe there is an annual cap. Is that correct?
That is correct. I would say it would depend on their specific tax situation. I don't know of any actual true cap. Now, what most people would perhaps consider is the amount of the deduction that can be used in a given year. Deductions, you cannot use all of your income. If it is a cash donation, you're limited to using 50% of your adjusted gross income in that year. Any unused amount can be carried forward for up to 5 years. If you are donating appreciated property, whether it's stock or real estate, there the cap is 30% in the year. And again, 30% of your adjusted gross income can be used in that year. And this is not something on the tax deduction, it's not something you can pocket, if you will, and use in later years just when you choose. If you have it available, you need to use it up into the limit that is allowed in that given year based upon the type of asset that you donated. Again, then you will just simply carry over any unused amounts. So no true cap, but most people would consider that as part of perhaps a cap, a self-imposed cap, if you will.
Okay, thank you, Joe. So we have about 18 minutes left, and I'm sure folks will have a few more questions, but we're doing fine on time, so please proceed.
Yes, so some of the more advantages of DAFs. Donors advise, on a donor advised fund, you're going to be able to deduct the fair market value of appreciated property donated to your DAF. This is going to be long-term property that you've held for greater than 1 year. Again, this could take the form of real estate, whether it be rental property, a farm, a vacation home, things that often you may not get that tax exclusion on any sort of gain that you would with a second home. It can be most often in the form of appreciated securities, whether it's individual stocks or mutual funds. It could even be a closely held partnership. Again, lots of different options, but for the most part, what you're looking at is a security that has appreciated over time. If you were to sell it outright by yourself while it's still under your ownership, you would be experiencing capital gain. This is a way to avoid that. Again, the money that would otherwise have gone to the government in form of tax can now go to a charity that you support. Very important to a lot of people.
Absolutely, Joe. And just to make another note here, one of the reasons that we chose to work directly with the Presbyterian Foundation in collaboration on our DAF is that they already have staff in place and expertise for assisting in these various types of transactions. So it enables us to make our own DAF that much more accessible, and that you can use even a wider variety of assets than you may have expected.
Absolutely. So again, continuing this idea of the advantages of DAFs, the things that people are most interested in. They offer an opportunity to really teach both children and future generations, this is with successor advisors, about how you give to charities and certainly the importance of charitable giving. Again, it's becoming more of a replacement for the traditional family foundation simply because of its ease both the relative lower cost and just simply an easy way for people to get younger people excited charitable giving. They offer the ability to monitor a charity's effectiveness and efficiency over time. So what I want you to think of here is, imagine if the gift that you were using was real estate. Most charities would not like to receive that piecemeal. It's going to be an all or nothing gift. You're not going to give a 1/10 interest in this home. With a DAF, you can make the gift all at once, if you will, to the Donor-Advised Fund, but then give money to the charity over time. Charities, obviously, they're no different than any other organizations. You can have changes in leadership, changes in direction, changes in ability to serve. Maybe they've even met the problem that you initially that they set out to solve. So again, donor-advised funds allow you to do that and contribute to it over time. And again, a legacy charitable vehicle. This really touches on the successor advisors that you can appoint. It doesn't just stop with you or your family, perhaps spouses that are initial successor advisors. It goes on to whoever they decide to name as their successor advisor. So they're giving, yes, they are starting it in their life, but their philanthropy can continue past that. Let's see, I had a few questions come in, Jim. I'm looking at...
Yeah, it's regarding the investments. So what we have chosen to do with our donor-advised funds that come in, we are investing with the Presbyterian Foundation so that expenses are kept low and returns are kept as high as possible, and then they are accounted for appropriately separately. So, Joe, would you like to make any other comment on that?
Actually, Jim, this is Greg. You're right. We are partnering on the investment to make sure we receive the best possible fees and lower the costs, but the assets are not commingled. So the assets are segregated where the Episcopal Church foundations are in their own account and not commingled with the Presbyterian foundations. So there is accounting, and actually the assets that are in those accounts are titled to the appropriate party. So if the Donor-Advised Fund is created and funded with the Episcopal Church Foundation, those assets are in an account that is titled to the Episcopal Church Foundation and is under the sole control of the Episcopal Church Foundation.
Okay. Thank you very much, Greg. Joe, we have just about 12 minutes left, so would you like to bring us home?
Yes.
You have plenty of time.
I move the... So who might benefit from a DAF? As you mentioned earlier, Jim, someone who is near retirement. Now, this is a person often in their highest earning years, getting ready to have a very different switch in many instances to a lower income. Well, that allows you, if you're contributing to a DAF in those years, as I mentioned, one, you're reducing your tax burden in those earning years, and that tax burden is going to take it off that highest marginal tax rate. So it's the most effective time to do it. And then it's not really any different than an IRA. In an IRA, you're putting aside money to support yourself in your retirement. With the DAF, you can put aside money to support your charities that you prefer during your retirement. So it's an excellent source to do that with. Someone who works on commission or has highs and lows in compensation. This is a great way, again, often tax-based. Have a year where you have an excellent earnings year, you have been bumped into higher marginal tax brackets. You can take some of the bite out of that taxes for both that year and potentially future years if you're carrying forward. But the gifts, again, they don't have to be made that year. You're lowering the tax bill that year, making gifts perhaps that year or in future years. Really an excellent tool for those type of people. And really, commission higher lows, we're going to a similar concept here, someone with a large windfall or bequest, an inheritance. I actually have, and I'll talk about a little bit more a specific example of that on the next slide, I believe. Someone with a highly appreciated asset. Again, we've talked about this multiple times. It can be stocks, mutual funds, a business. It can be real estate, vacation property, rental property, lots of different things that have appreciated over time. And again, it really provides flexibility to anyone. As you mentioned earlier, do not have to be Episcopal to open this with the Episcopal Church Foundation. You can support institutions within the Episcopal Church. You can support ones that are tied to the denomination. You can support ones that are charities that are not tied to the denomination, perhaps the Red Cross, things like that. But again, a lot of flexibility, both in terms of time, who you can support, who can open them, who can be a successor advisor, a lot of flexibility. And that is one of the true benefits to this compared to other similar structures in the past, such as a family foundation. So now,
before you jump into the examples, Joe, I just wanted to answer Tom's question. It is not a flat fee, but it's a percentage of the donor advised fund assets that are in your fund. That's how fees are assessed. And the amount of fees, and I'll be sharing this with participants of the webinar tonight, is based upon how your assets in the donor advised fund are invested. So based upon which funds are chosen, that determines the basis point fees, the small percentage which is charged against those assets as the all-inclusive fees that take care of those. Joe, go right ahead.
Yeah, so nearing the end here, some real-world examples of people that I've worked with. One, I have the estate planner. This lady, she wanted to incorporate a donor-advised fund into her estate plan. Now, we had a donor-advised fund that was already existing, and the way she did that was I worked with the attorney to help draft language into the will where assets from the will poured over into the donor-advised fund. That gave her the ability to have full access to those assets during her life, should she need them. However, she was making a charitable gift at her death, and she was naming a successor advisor. So she didn't have to make options, choices at her death for exactly where everything would go. This gave the successor advisor, which was a family member, the flexibility to support different things. Again, constant is change. So what she may have chosen early on may not be what you want to support 10, 20, 30 years down the road. And that donor advised fund offered the flexibility to do that.
Joe, let me just add in, wills, assets are not being transferred as much through wills as much as they have in the past. Mm-hmm. A lot of assets now are either in trusts or in retirement accounts and mm-hmm. things. And recently we worked with a gentleman that put a transfer on death provision in his IRA mm-hmm. to transfer the assets, a certain portion of the assets from his IRA into a donor advised fund upon mm-hmm. death. So as you think about estate planners, just don't consider wills, consider assets in other places as well, such as living trusts, retirement accounts, and the like. And there are effective ways. That's a very effective way to fund a donor advised fund and then pass those assets to successor advisors.
That's exactly true, Greg, and we're seeing it as well, and we're reading more and more about it over time, that as people consider their planned gifts that they will ultimately give, donor advised funds can figure in prominently so that their wishes will be best fulfilled. Go right ahead, Joe, and wrap us up. We have just about 6 minutes.
So the last two here. Too much income, an excellent problem to have for most of us. This lady, actually, she owned, she was a part owner with siblings of a farm, a family farm. Each had equal shares. There were 5 siblings. That had been providing an ongoing steady income as a working farm. However, this family these siblings were getting later in life. They decided to sell the farm. Now, she may not have chosen to do that, but ultimately the majority won out, and there was a very large influx of income, very large for her. What she was able to do was put a decent portion of that influx of income into the donor advised fund, reduce the tax bill there that year, and then again grant that out to charities over that year and the future years. Again, an excellent way for tax savings, but also future charitable giving. Final example here, sharing the gain with the charity instead of Uncle Sam. I've mentioned that already today. I had a couple, elderly couple, that had a very nice investment portfolio. They wanted to support specific charities over time, and a variety of charities. What we were able to do was help them transfer that portfolio into their donor advised fund. So one transaction for them instead of multiple transactions over time to different charities. So the bulk of the work, the difficult part, if you will, was the transfer of the investment account into the donor advised fund. After that, it made it a lot easier for them. If they had to do those individual charities over time with a little bit of stock here or there, a lot more difficult, a lot more paperwork, a lot more difficult for both them and the charities involved. Again, it's about ease and making things easy for the donors that are wanting to support these charities.
And much more cost effective, would you agree, Joe, that if you're able
Yes.
to make one singular gift of a large block of stock, of a large property, whatever the case might be, you only need to do that once and incur the legal cost or whatever is involved in transferring those assets once, and then you can make as many grants as one would wish to over time. So it's a real savings for many people.
Absolutely.
And if you're using property as an example, yes, it's lower legal fees, but you can now support more charities than you would have ever been able to, because again, charities don't really split an interest in property. It's an all or nothing. So it opens opportunities that just simply weren't there before, or at least in certainly a cost-effective manner.
Well, and just to wrap up as we close out for tonight, there are just so many, many different options with the Donor Advised Fund. It is a vehicle that is so flexible, so useful throughout, the lifetime of a donor. And it's just so exciting that we are able to make this available with our partnership with the Presbyterian Foundation. I've just noted a few examples of some of the many, many options that people may consider, either the diocese of which they're a member, their camp and conference center that they may have a great affection for, various relief and development agencies, such as Episcopal Relief and Development or Presbyterian Disaster Assistance, your parish. Even though your donor advised fund cannot go directly to pay off a pledge to a capital campaign or a pledge annually, you can advise your local parish that you intend to make grants from your donor advised fund, and they can recognize those grants when they are made to them. You can also continue to support those causes that are most important to you, even beyond the Episcopal or Presbyterian churches, into secular charities such as the wonderful American Red Cross and other charities like seminaries, which very much need your support on an ongoing basis. So the bottom line that all of us want you to go away with tonight is that you have donor advised funds available to you as an option. If you choose to work with us at the Episcopal Church Foundation, we have a great donor advised fund which is very flexible, a very low threshold, and through our partnership with the Presbyterian Foundation, one which enables you to have an incredibly flexible array of investment choices and tremendous capacity to make gifts and have access to your donor advised funds through an online application. So this is one of the fastest growing, if not the fastest growing medium in philanthropy today, and we are so happy that we're able to make this available to you to support those charities that are so dear to your heart. So just to wrap up, is an ECF DAF right for you? Well, That's only a decision you can make. All of us here at the Episcopal Church Foundation would be happy to work with you. That's a screenshot of the Donor Advised Fund Program Guide, which you can download or that we can email or mail you through postage. So contact us. Let us know if we can work with you to uncover if this is the right gift for you to make. As many of you know, all of our webinars, including tonight's, has been recorded for your future viewing. So please take advantage of looking at our other webinars, which help build up the leadership and financial resources of your parish or Episcopal organization. And please do check in on our upcoming webinars. All of us here at the Episcopal Church Foundation, this is a screenshot of my current team. We are always available to help you and support you, and we make partnerships with great organizations like the Presbyterian Foundation so that we can enable you to give funds to those causes that you most deeply support. So unless my friends Greg and Joe have any final comments, I'll be wrapping up for tonight.
Thank you so much, Jim, for allowing us to participate. It's been a joy.
Second that entirety. Absolutely a pleasure to join you, and thank you for the opportunity, and look forward to working with you in the future.
Yes, we're here to help.
Well, thanks guys, and thank you, all of you, for attending tonight. I think most of you are attending from home, but if you are attending with a group, as many of our webinar folks do, please get home safely and have a very blessed evening. Good night.
Good night.
Yeah, good night.